Are you nervous about the real estate market? You confused about the real estate market? Wondering where the real estate market's going to go? Is it going up? Is it going down? Interest rates, are they going up? Or are they going down? Are they high? Or are they low? Are they where they should be, as some people have told you? Yeah, well, let's discuss all of that. Let's get into it in just a minute. And let's see if we can figure it out for you and kind of give you a heads up to where I think things are going to go and how it's going to go. And then we'll discuss what you should do. So let's get after it right after this. So yeah, right now, the real estate market, everybody's kind of freaking out about it. You see the headlines from the news, all the different news organizations, and they're all talking about, oh my God, the housing prices have fallen. Oh my, less people are buying, everything's going down, it's going to crash. No, it's not going to crash. My next headline is, well, maybe it's not going to crash. Maybe there's more people buying, but house prices are falling. So we don't know. Interest rates, they went way up. They went up to 7.24% from 3%. And now they've come back down to 6. Are they going to keep coming down or are they going back up? Well, headlines, we don't know. Here's what we do know, is that first thing you need to realize is that interest rates are not directly tied to what the Fed does. Interest rates on mortgages are backed by mortgage-backed security bonds. So investors buy in to bonds that are financing the interest rate or financing mortgages. So when you take a mortgage out, that mortgage goes to a broker, and the broker does the deal to make you a loan. And then he sells that loan and packages it up to a third party. And they'll usually take that and package it up with a bunch of other mortgages, put it all in one major bond, and then they'll sell it off to investors. And the interest rate that the investors pay to get that money, to give you that money, the interest rate that they get back is based on those bonds. And so your money for interest rates are more closely tied to bond rates and more closely tied to what Wall Street's doing. If Wall Street's making a bunch of money for people and giving them a good return of 7 or 8%, well, they're going to want that kind of money back on interest mortgages, or they're not going to buy the mortgages. But if Wall Street's returning bad money for them and bond prices are going down, they're not getting much interest there either. So one of the ways they look to increase their money that they've got coming out is to loan more money out for mortgages and lower it at a lower rate. So it kind of floats around all over the place. But generally, one thing we do know is that inflation goes up, interest rates generally tend to come down because investors look at it as Fed starts increasing interest rates, and the stock market starts crashing, so they start trying to buy mortgages at a cheaper price in order to create the interest. So right now we're looking at about 6%, 6.5%, somewhere in there. Depends on the mortgage company, and it depends on where you're at and what locality you're in. And one of the things we want to talk about, because you see the headlines that, housing prices are falling. Housing prices are going up. Buyers aren't buying. all real estate is local. I'll say that again. Real estate is local. So you know, if you're in San Francisco, houses prices are going down. If you're up here in Sacramento, where I'm at, houses prices are staying pretty steady. That's the reason is because a lot of the people that are selling in Sacramento are coming up to, selling in San Francisco are coming up to Sacramento. And the market is still strong here. We're still getting a lot of people coming looking to buy. And the thing is that the headlines and stuff has scared off all the sellers. So there's a lot of sellers that are sitting there on their houses going, "Oh, I'm not going to put my house on the market because the headlines are telling me the houses are falling. It's taking forever to sell. So I'm not going to put my house on the market. I'm not going to sell it." Well, you know, our inventory is very low right now. Probably about 50% of what it normally is this time of year. So there's not as many houses on the market right now. Newer houses that come on the market are selling pretty quick. Houses that's been on the market for a while are still on the market. And the reason for that is that people have already looked at them. They've already been picked over. And they're going to need price reductions or some fixing up and stuff like that to get them to move. But the newer houses that come on the market, as they come on the market for the first time, people get a good look at them. They're selling pretty quick. So average time on the market here in Sacramento is running about 40 days. And that's an average overall. I just did an open house last weekend on a small little house in old historic Roseville. It was on the market for $379,000. It was only 960 square feet. It was 2 bedrooms, 1 bath, a living room, and a kitchen. It was an old house built in 1906. Cute as can be, but they did it up, and it was a really cute house. Great for a single person looking for the first home type of thing like that. Went under contract for 3 days. So, that tells you that if it's priced right, it's a nice house, it's priced right, it's going to sell. But there are still some good bargains out there. That, if you're looking to buy a house, there are some good bargains. And right now, let's get back to interest rates for a minute. If you look at historically, and I know this doesn't matter to a lot of people because a lot of people go, I've had people say, "Hey, interest rates were 18% back in 1984, so, what are you complaining about?" Well, a lot of people weren't born in 1984, so it didn't make any difference. That's kind of like going to the doctor and saying, "Hey, doc, my leg fell off." The doctor saying, "Well, guess what? I had a guy in here the other day, had 2 legs fall off." Could have been worse. Well, no, because your leg's still missing. 6% still seems like a lot of interest to you because you saw 3%. The sad part is, I hate to break the news to you, is that I don't think we're going to see 3% again. Not for a long time. If we do, it's going to be because the economy totally collapses again and all the banks run out of money like they did last time in 2008, and we have another COVID or another, some kind of disease comes along and locks us all in our houses again and starts killing millions of people off. Let's hope none of that happens. Let's hope everything stays smooth from here on in. And if that's the case, then yeah, I don't think interest rates are going to drop much below 5%. I think around 5% is where we're going to settle out. It's going to be probably normal interest rates for quite a few years for us. 3% were an anomaly. We hadn't seen those since 1930s, and I don't think we'll see them again in this lifetime. We'll probably all be dead before we see 3%. So if you're hanging out for 3%, might as well give it up because it's not coming. If you're hanging out for a major price drop and everything to drop, the bottom fall out and houses to drop down to $250,000 again, not going to happen. Not in this lifetime. There's too much pent-up demand. There's still a lot of people wanting to buy houses, and we don't have the houses to supply them. There's not enough new houses coming on the market, and the houses that are coming on the market, the newer houses that are coming on the market, quite honestly, they're not that good a bargain in my opinion. I mean, if you don't like a yard and you want a house that's $600,000 with no yard and no space, then yeah, I guess that's what you want. But existing homes with decent sized yards and stuff like that are getting real hard to find, and they're at a premium, and you're going to have to pay for it to get it. But 6%, 5% are going to be our standard interest rate. Now, the good thing is, if you're here in California and you're a first-time home buyer, there's a new program that just started. I've done a couple of videos on it already. You may have seen them here on my channel. It's called the California Dream for All Shared Appreciation Program. Basically, quick rundown on it. You can look in my videos and you can get a more detailed description of it and what it all entails. But basically, the state government is going to partner with you, and they're going to loan you up to 20% as a down payment of the value of the house. Now, 20% is a huge down payment. So if you're buying a $400,000 house, they're going to loan you 20%, which is $80,000. You now only have to borrow $320,000. And if you use the whole 20% as a down payment, you don't have to pay PMI insurance on it. And you're going to be able to get into that house, and you're going to have payments with your insurance and everything. Should run you around $2,500 a month, thereabout. I'm not a loan officer, so I can't. Don't hold me as that as gospel, but that's pretty close to where you're going to be. And you know, again, I'll hook you up with a good loan officer that'll get all that numbers for you and nail it all down to a T, so you know exactly where you're going to. But yeah, and the thing about it is you don't have to pay that money back, not while you're living in the house. While you're living in the house, all you have to do is live in it. They're giving you that 20% or that $80,000, and you don't have to make a payment on it. Not a dime. You don't have to do anything. When you sell the house or transfer the house out of your name to somebody else, then you have to pay back that $20,000. You have to pay back that $80,000 plus, and this is where they partnered with you in an equity share, is that the appreciation of the house. So if you buy a $400,000 house and say 5 years from now you resell it and you sell it for $500,000, well, you've got an appreciation of $100,000. They want a piece of that appreciation, so they're going to want their $80,000 back, plus they're going to want 15 or 20%. So 20% of that 100,000, so they're going to want another $20,000. So you're going to give them $100,000 back, but you're going to be able to keep the whole appreciation. You're going to be able to keep an $80,000 appreciation above the 100,000. So 100,000, 20,000 of it goes to them. The other 80,000 goes to you in your pocket. It's free money. It's not free money, but it's as good as free money. It's as good as you're ever going to get. So if you're thinking about it, but the thing about it is that program is very limited. They've only funded it with a certain amount of funds, and when those funds run out, we don't know if they're going to reauthorize more funds for it, if that's going to be the end of the program or whatever. So it's a limited time. If it's something you think you'd be interested in, you want to get in on it, and you want to do it pretty fast before they give out all the loans and run out of money, because there's thousands of people all over California that are applying for that program now. But yeah, that's the thing about it is I think if you want to buy a house here in Sacramento area, I'm talking Roseville, Placer County, El Dorado, type of things like that. If you want to buy a house here, now's a good time to do it. It really is. You can always refinance later if things drop. I mean, if it drops, a point or two down to 4% or something like that, then you can refinance. But get in now, start enjoying it. I don't think you're going to have to worry about the bottom falling out. You're going to be buying a house that you pay $500,000. Next year it's only worth $300,000. I don't think that's going to happen. I just, I'm not a soothsayer. I can't tell you everything's going to happen in the future. But reading my tea leaves, I don't see it happening. Not now. Not with the shortage of inventory, not with the pent-up demand. Things may level off. That house may only be worth, if you buy it for $400,000, it may only be worth $400,000 again a year from now. But then again, 10 years from now, it could be worth $1 million. We don't know. But I will tell you that right now, if you can afford to get in the house, now's a good time. There's no use holding your powder. There's no use waiting. I hope this takes a little bit of the confusion out of the market for you, helps you understand a little bit better. Don't pay attention to the headlines, because the headlines are national headlines that don't tell you about the area you live in. And if you're going to look at data, contact me. I'll give you all the data you want. I'll give it to you in hard numbers. I'll tell you how many houses sold, how long they were on the market, what the average price is going for, how many went for cash, how many went for financing, and things like that. If that's really the details that you want to get into, I'll get down the nuts and bolts with you, and we'll dig into it deep. I'm more than happy to try and explain it all to you and to teach you a little bit. But again, don't fear the market, because it's still a good market, and now's still a good time to buy. And if you're sitting around waiting for the major crash to come, you're going to be waiting a long time. So don't advise it. All right, guys. And, again, contact me. Monte Roberts. I'm with HomeSmart Realty, HomeSmart ICARE Realty. We've got offices in Roseville, Sacramento, Auburn, Grass Valley. We're all over the place, Elk Grove. And, I'll be glad to meet you in any one of our offices, close to wherever you're located at, and we'll sit down and talk if you want to. We can have a video chat if you want to, whatever you want to do. Again, it's Monte Roberts. My telephone number is 916-426-9044. All my information will be right below. And, do me a favor, subscribe to my channel here. I'll be putting out weekly videos with updates on the market, different areas of the city. So if you're thinking about relocating to Sacramento and you've never lived here, the channel is called Living in Sacramento. I'll be glad to, you'll get notified when I put up new content, and might be something you might be interested in. But again, if you want more details, you want to get in contact with me, feel free to contact me. Subscribe to the channel, and thanks for listening. If you like this video, if you get anything out of it and like to see more like it, make sure you subscribe. Hit the bell button so you get notified when we do put up a new video. And do me a favor and hit the like button too. Let me know that you liked it. And I want your opinion too. What do you think? What do you think about the real estate market? Do you think it's going to go crazy? Do you think it's a good thing? Do you think interest rates are going to fall? Do you think we're going to go into recession? Let me know. Put it in the comments below. And get in touch with me. All my details are right below. So hit me up. Let's discuss it a little bit more. Thanks.